What if I told you the biggest advantage in today's market isn't having more money, it isn't having a special tip, and it isn't predicting tomorrow, it's understanding more today? Because knowledge reduces fear, understanding builds confidence, confidence creates discipline, and discipline, it changes lives. Good morning, Bulls. I'm Donald Johns, the host of Unbearably Bullish, the official podcast of the Bull You Can't Bear. And welcome to another edition of Wall Street Wednesday, where Main Street meets Wall Street. Let's get over the hump together. It is hump day. Every Wednesday, our mission is simple: to help you understand the markets, business, economics, technology, and innovation, and the forces shaping our financial future, not through hype, not through fear, not through predictions, but through education, because one investment always compounds knowledge. So grab your coffee, pull up a chair, and let's ignite today's market discussion. Every market opens, but not everyone is prepared. Today's market ignition isn't about what happened overnight. It's about how we prepare ourselves before reacting. Markets move every day. News changes every day. Opinions change every day. Prepared investors understand reaction rarely beats preparation. Whether you're investing, running a business, leading a team, or building your future, preparation gives you an advantage. That's why we begin here every single Wednesday. Let's do the market pulse. Every market move tells a story. The question is, are you listening? Markets don't move randomly. Every movement has context: interest rates, inflation, employment, corporate earnings, artificial intelligence, consumer spending, economic growth, innovation, global events. Sometimes markets move because expectations change. Sometimes market moves because emotions change. Successful investors ask a different question: not what happened. Instead, what can I learn from what happened? That simple question changes everything. Instead of reacting, you begin understanding. Instead of fearing, you begin learning. And that is exactly why we're here. Let's do the bullish breakdown. Understanding market volatility and the VIX index. If the market had a fear thermometer, this would be it. One of the most talked about indicators on Wall Street is the VIX index. You probably heard commentators say the VIX is rising or the VIX is falling. But what exactly does that mean? The VIX is commonly known as the market's fear gauge. More accurately, it measures the market's expectation of future volatility based on option prices linked to the S&P 500 index. Notice what I didn't say. It didn't say it predicts whether the market will go up or down. It doesn't. Instead, it reflects how much movement investors expect over approximately the next month. Think about it like checking the weather. A weather forecast doesn't guarantee a storm. It tells you conditions suggest one may be possible. The VIX works in a very similar way. When uncertainty increases, the VIX often moves higher. When investors become more comfortable, the VIX often moves lower. That doesn't automatically mean markets are bullish or bearish, though. It simply tells us expectations for volatility have changed. Here's the lesson: don't fear volatility. Understand it, because uncertainty creates opportunity. For those who remain disciplined, knowledge replaces panic, preparation replaces emotion, and understanding creates confidence. Let's do the bull versus bear. Today, we're going to focus on artificial intelligence across the economy. Every innovation creates opportunity, and every innovation creates new challenges. Today, let's look at artificial intelligence, not through hype, through education. Let's start in the healthcare sector. Let's give the bull case. AI is helping doctors and researchers analyze medical images more efficiently, assist with diagnostics, accelerate drug discovery, improve hospital operations, support personalized treatment planning, potential benefits, earlier detection, improved efficiency, better use of healthcare resources. Now, your bear case. Healthcare also faces important questions: patient privacy, clinical validation, cybersecurity, regulation, and ensuring AI supports, not replaces, human medical judgment. Innovation must be balanced with safety. Now let's go into the financial services space where I'm approaching my 25th year anniversary. Wow, it's a big one. The bull case: banks and financial firms are using AI to detect potential fraud, improve customer service, enhance research, support risk management, increase operational efficiency. Now, your bear case includes challenges like cybersecurity, model risk, data quality, regulatory oversight, over reliance on automation. Technology should support human judgment, but definitely not replace it. Now we're going to move on to manufacturing. The bull case: predictive maintenance, factory automation, quality control, supply chain optimization, reduced downtime, improved productivity. Switching to the bear case, challenges include high implementation cost, technology integration, cybersecurity risk, employee retraining, operational disruption during adoption. Now let's move into education. The bull case: personalized learning, language translation, tutoring assistance, accessibility tools, research support, more individualized educational experiences. Your bear case: academic integrity, that's a big one, accuracy, student privacy, overdependence on AI, maintaining critical thinking skills. Technology should enhance education, but not replace learning. On to cybersecurity. Your bull case: AI helps organizations detect threats faster, monitor suspicious activity, respond more efficiently, and strengthen digital defenses. Your bear case: unfortunately, cyber criminals also use AI, creating more sophisticated attacks, making cybersecurity an ongoing technological race. Moving into transportation, your bull case is autonomous vehicles, traffic optimization, fleet management, supply chain efficiency, smarter logistics. Now moving to the bear case, your challenges include safety validation, regulatory approval, infrastructure, public trust, and liability. On to agriculture. Your bull case: precision farming, crop monitoring, weather analysis, water management, yield optimization, helping farmers make more informed decisions. Now let's move to the bear case. The bear case is technology costs, internet connectivity, training, adoption challenges for smaller operations. Now on to retail. We're going to move quick on this. Bull case: inventory management, demand forecasting, customer recommendations, supply chain optimization, pricing analysis. Your bear case: privacy concerns, consumer trust, implementation costs, data security, balancing automation with the human customer experience. So, who's right? The bulls or the bears? I always lean to the bull. Maybe both. One of the biggest mistakes investors make is believing there's only one side to every story. Successful investors evaluate opportunity and risk, optimism and caution, innovation and execution. The goal isn't to react emotionally. It's to understand both perspectives before forming your own. That's how informed decisions are made. Let's move on to where Main Street meets Wall Street. You don't need to own a single stock for Wall Street to impact your everyday life. I mean, think about your daily routine: mortgage rates, car loans, credit card interest, retirement accounts, job opportunities, healthcare costs, business expansion, consumer spending. Wall Street influences Main Street in more ways than many people realize. Understanding the markets isn't about investing. It's about understanding the environment business, families, and communities operate in every single day. That's why financial education matters, not just for investors, for everyone. Let's do the bull board. Don't just watch stocks. Watch the forces that move them. That's impactful. One of the biggest mistakes investors make is focusing on only stock prices. Instead, watch the bigger picture. Here's what's on this week's bull board. Inflation. As prices continue to rise or beginning to stabilize, inflation influences purchasing power, business cost, and monetary policy. The Federal Reserve. Pay attention to what policymakers are saying about the economy, inflation, employment, and interest rates. Their communication can influence market expectations. Now let's talk about employment. Strong labor markets can indicate economic strength. Weak labor markets can signal slowing economic activity. Employment data helps paint a broader picture of the economy. Moving on to corporate earnings, how are companies performing? What are management teams saying about the future opportunities and challenges? Earnings reports provide valuable insights into business conditions. Consumer spending. Consumer spending plays a significant role in economic activity. When consumers are confident, spending patterns often change. Understanding these trends helps provide you context. Treasury yields. Treasury yields can influence borrowing costs, mortgage rates, and investment decisions across financial markets. They're another important piece to the puzzle. Remember, none of these indicators tell the whole story, but together they help us better understand the environment we're investing in. Now let's move to the Hump Day Challenge, baby. One small habit every week can completely change the way you think 5 years from now. That is impactful. Here's your challenge. Pick one publicly traded company. Don't buy it. Don't sell it. Just study it. Read its mission, its products, its earnings summary, its annual report, its shareholder letter, its risks, its opportunities. Every great investor started exactly where you are, learning one company at a time, because knowledge compounds, confidence compounds, experience compounds. The only question is, are you willing to keep learning? I'm going to do my quote of the week. The market rewards preparation far more than prediction. Think about that. Preparation. Preparation is reading. Preparation is asking questions. Preparation is staying curious. Preparation is showing up every week ready to learn. Let's do the Bulls bottom line. Today's biggest takeaway: the market doesn't owe anyone certainty. It doesn't owe anyone easy answers. It doesn't owe anyone instant success. But every single day, the market offers us another opportunity to learn, to improve, to become more disciplined. The goal isn't to predict every move. The goal is to become the kind of person who understands them. Knowledge won't eliminate uncertainty, but it can help you navigate it with greater confidence. And confidence may be one of the greatest investments you'll ever make. I want to talk about the community movement here on this platform. Before we wrap up, I simply want to say thank you to every viewer, every listener, every subscriber, every follower, every guest, every business owner, every entrepreneur, every investor, every student, every family, every member of this incredible community. Thank you. This show isn't built around me. It's built around us, a community of people committed to learning, growing, supporting one another, building businesses, building wealth, building stronger futures. Every comment, every message, every share, every conversation helps us continue growing this movement. I genuinely appreciate every single one of you, and I want you to know we are just getting started. Tomorrow, we're going to move on to Networking Thursday. We're talking about something that can completely change your life, which is relationships, because opportunities rarely begin with algorithms. They often begin with conversations. We'll discuss networking, collaboration, building trust, creating opportunities, and how one introduction can change your future. If you're serious about business, entrepreneurship, career growth, or expanding your network, tomorrow's episode is one you don't want to miss. I have to add the ending disclaimer here. The opinions expressed on this podcast are those of the host and provided for educational and informational purposes only. This episode discusses general market concepts and should not be considered individualized financial, investment, legal, or tax advice. Investing involves risks, including the possible loss of principal. Always conduct your own research and consult qualified professionals regarding your personal circumstances before making any financial decisions. Woo! Okay, so now this is signing off time, and this is more than a podcast. It's a commitment to keeping learning, to keep asking questions, to keep challenging ourselves, to keep building stronger businesses, stronger portfolios, stronger relationships, and stronger lives. This is the Bull You Can't Bear. This is the Unbearably Bullish Podcast. Strong markets, stronger mindset, unlimited opportunity. Let's connect, collaborate, build, grow, and monetize. Let's get over the hump today, baby. It's Hump Day Wednesday. Join the herd. Follow us on all the socials. And remember, markets will open tomorrow. Headlines will change tomorrow. Opportunities will continue tomorrow. But one investment that will continue paying dividends for the rest of your life, your commitment to learning. Until next Wednesday, keep asking questions, keep building your knowledge, keep moving forward. And as always, stay unbearably bullish. I love all of you, and thank you for tuning in. I appreciate all of you. Have a wonderful day. Bye-bye.